Welcome to our podcast on private equity funds, where we delve into how to invest in this exciting asset class and see high returns. As a specialist in private equity market, we understand the importance of investing wisely in order to maximize returns. In this podcast, we will be discussing the ins and outs of private equity funds and how you can invest in them to see high returns. Firstly, what are private equity funds? Private equity funds are pools of capital managed by professional investors who use the capital to acquire and operate companies. Private equity investors seek to add value to the companies they invest in and generally hold their investments for several years before selling them. Private equity funds typically invest in companies that are not publicly traded, meaning they are not listed on the stock exchange. This can make it difficult for individual investors to invest in these companies, but private equity funds provide a way to access this asset class. So, how can you invest in private equity funds? Firstly, private equity funds are typically only available to accredited investors or institutional investors due to their high minimum investment amounts. Accredited investors are individuals with a net worth of at least $1 million or an annual income of at least $200,000, or married couples with a net worth of at least $300,000. Once you have met the accreditation criteria, you can invest in private equity funds through a variety of channels. Private equity funds can be accessed through investment managers, financial advisors, and investment platforms. It is important to do your due diligence when selecting a private equity fund to invest in, as factors such as the fund's investment strategy, track record, and fees can all impact your returns. So how can you see high returns on your investment in private equity funds? Firstly, it is important to understand that private equity funds typically have a longer investment horizon than traditional investments such as equities or bonds. Private equity funds can take several years to mature, but this longer holding period can often lead to higher returns for investors. Secondly, private equity funds tend to invest in companies that have strong growth potential. These companies may have a unique product or service, a strong management team, or a competitive advantage in the market. By investing in companies with high growth potential, private equity funds can see significant returns when these companies reach their full potential. Finally, private equity funds can generate returns through the use of leverage. Private equity funds often use debt financing to acquire companies, which can amplify returns for investors if the investment performs well. However, it is important to note that leverage can also increase risk and should be used prudently. In summary, private equity funds are an exciting asset class that provide opportunities to invest in high-growth companies and see significant returns. By understanding the accreditation criteria, performing due diligence, and selecting investment strategies wisely, investors can access this asset class and see strong returns over the long term. Thank you for listening to our podcast on how to invest in private equity funds and see high returns. We hope you found this information informative and helpful in making informed investment decisions. Stay tuned for future episodes on private equity funds and other exciting investment opportunities.